So welcome everybody, no matter where you are today. I think for some people very early on the East Coast in New York or even further west, we had the registration from Minneapolis. So good morning to you and thank you for joining this early. Other people, good day or good afternoon, good evening. So it's fantastic to do this virtually. You see the reach is much wider, obviously, although we like to do these events in person as well. And so between Charles Hoskinson and Harumi, the record is now on 3 appearances at the Tokyo FinTech Meetup. Harumi being very versatile and started her career as the first woman on the fixed income desk at Morgan Stanley here in Japan, and was the first topic we talked about on a panel on diversity and inclusion. She's doing some initiatives outside of finance and doing a startup on space data, so it's called Celestial Data. That was our meetup almost a year ago. And normally it would be the time now for you to return and see your family again, and given the environment, we decided to do this virtually, which is great. Gives a few more people the opportunity to attend, to learn in the first place what Celsius is, and secondly have maybe a more general discussion about DeFi, decentralized finance versus centralized finance versus legacy banking, etc. So I think almost at this point most people are familiar with Zoom, but while Harumi is giving a brief presentation, so you see the slides up here, any questions that you might have while she's speaking, please use the Q&A box. I'll be trying to keep an eye out for that, and if it's a question that needs to be asked immediately, I'll interject, and otherwise we'll use the questions to do Q&A afterwards. I'm sure there will be very interactive, and depending on how many people we have, we might also have the opportunity for you to raising your virtual hand, and we can switch you on and you can ask the question in person. Then we don't need to be so text-based. So that's enough for me. Thanks, Harumi. It's great to see you again. And take it away, please.
Thank you, Norbert. And then I promise you next year we'll do this in person in Tokyo. All right. So like Norbert started, good evening, good afternoon, good morning to everybody, depending on where you are logging in at this hour. Thank you so much for tuning in to hear a few things that we are doing at Celsius Network. Really, as a few years ago, when the blockchain really kind of became a thing that everybody began to talk about, the founders of Celsius also got on that wave, started the company. Actually, it's one of the very, very few companies, I think, that raised ICO, that raised the first capital through ICO, and it's still actually still alive, and actually living with the solid business model. I think there's a lot to be said about that. So what is really Celsius Network? Our mission is to put interest income and economic freedom in the hands of the people by taking it away from the banks. So, I mean, we all have a bank account somewhere. I do too. And how much interest do you earn on your hard-earned US dollar or JPY or whatever the currency that you earn? Less than 1% nowadays, right? Celsius, depending on which currency you have, whether you have Bitcoins, Ether, stable coins, the percentage varies because the percentage of the rewards that we pay on each coins really depends on our needs, where the market is for each currency. Just like if you have multiple currencies around the world, each currency earns a slightly different interest. But I guarantee you it's not less than 1%. The lowest one that you will find is somewhere around 5%, and it goes all the way up to 15–16%, depending on what currency you have and what kind of combination you have. So we are trying to provide economic freedom by earning on your hard-earned dollar. With that, we'll proceed to the next slide. So the problems that we are solving, I kind of mentioned about that on the previous slide already, but we are trying to basically provide as much return on your money as possible. That is really the bottom line. But when you have cryptocurrency, what are some of the problems you face? You don't go to bank, deposit Bitcoins and say, oh, please give me an interest on that. So there's really no obvious way to earn interest on your currencies. And if you want to borrow against your cryptocurrency positions, it's very hard to get loans because it's still not considered as the real assets by many financial institutions. There are very limited number of tools out there for you to do the investing, thinking about how to manage your portfolio, however that comes, and also buying and owning crypto is difficult. How many of you really have wallets? Right? I mean, probably if I ask that question, and this is in-person event, and I ask you to raise hands, probably the number of hands that I will see is disproportionately large. If I ask the same question just out on the street, how many of you have Bitcoins? So I think it's not the most fitting question to probably ask for this crowd, but still we know that it's more difficult. You can just go to the website and then find any financial institution, hit the button. You have to do a little bit of homework first. We're solving all these problems by providing so Norbert mentioned about centralized finance, decentralized finance. We are acting as the centralized finance amongst the decentralized finance industry. That's what I always say. We are the CFI of DeFi. This company started really mobile app first. We are currently developing a web app as well. So it is going to change just a few months down the line. But right now we are the mobile app company, and all the stats that you're going to see throughout today's presentation, they were the numbers that we took as of June, and things really have been going up and up since then. So the numbers are really outdated, although it's only 4 months ago. For example, in this slide later on, you're going to see that our fund size is a little over 600 million. Now we actually have 1.6 billion. So in the short 4 months, things changed a lot for us. But as of June, we had 123,000 users, and we had 250,000 plus downloads of the applications. 80% is really coming from word of mouth, very organic things. We don't do a big sort of marketing or advertisement, buying an expensive advertisement space or something like that. User growth and retention, as I mentioned, I mean, we grow really fast, and then from the middle of last year, you've been already seeing this curve, and it's only accelerating faster. So over the last year, the app downloads increased by 230%, and over 85% of the people actually completed the KYC, know your customers, meaning they did all the paperwork and all that stuff, and they actually are using the application in one way or another. Money over IP business model. So how do we generate income? I mean, this is actually one question that I very frequently get. So okay, fine. I give you my Bitcoins, and then somehow I get the payout every week. How do you make money so that I can receive the rewards on my Bitcoins and then other coins? It's because we are doing something with your coins once you transfer your coins to our wallet. We do make a lot of loans to both retail and institutional clients. So we actually have B2C and B2B aspect to our business model. While going into it in detail is not the purpose of today's presentation, basically the retail customers mainly use the telephone apps, deposit the coins to us, and sometimes they borrow money using their own coins as collateral. And what we do is we go find the US dollars or the USDT, USDC, the stable coins, and then we lend those monies against the client's collateral coin, and then we collect interest on that. That's one way of us making money. With institutions, we are far more leveraged because we don't only have to do the stable coin or the fiat business. We can do coin to coin. Sometimes it goes in reverse. So we have a lot of different ways to make money. And then with all the lending platforms, and now with DeFi on the horizon, there are several different ways that we are making money as well. And whatever we make, unlike regular companies, which first to pay all the expenses and distribute the money amongst all the shareholders and everybody else, and the rest goes to, let's say, if it's a financial institution, the customer's money. We actually, from the revenue that we get, we pay up to 80% out as the rewards on all of the coins that people deposit with us. And with the leftover money, if you will, we actually pay all other expenses. So that makes the return ratio hugely different from the regular financial institutions. This is the team, 65 strong, indicates that we have about 65 people now. And this is not accounting some of the outsourced team and stuff like that. So Alex Mashinsky, if you have been following some of the entrepreneur scene or even just blockchain scene, you probably have come across his name. He is speaking all over the world, so, literally speaking. Half the people that I speak to have heard of Alex. He has not done just this. This is his eighth entrepreneurship road that he's taking. He has multiple public companies, and the areas where he kind of was active, where he started his company, only the probably common string is that they're all technology, they're all involved technologies, and otherwise they are all very different. And he's intending to make this one yet another success. He has every intention, and we are trying to make that happen. Between Alex, Daniel on the left, and Nuke, who is the other person who's kind of with me in between, those are the co-founders of the company, and collectively they are the CEO, COO, and president and CTO. Myself, I'm the CFO. I also have the function of CIO, so I have both accounting and the trading desk under my department. And then we have the business development, we have the lending department, and then we have the general counsel. And the team is really expanding fast. From the end of July to August, we added probably 15 people or so on a payroll. And this month, yet again, we're going to add another 10 people or so. We, with the Series A just finished, completed, we are expanding really, really fast. Through Series A, we raised a little bit over $20 million, which is a pretty big amount of money for Series A. And we were evaluated the largest of the same stage company in the blockchain, the crypto industry. So we are quite happy about the outcome of this one. Celsius Network 2020, this is just some of the stats. Again, as I said earlier, the stats go outdated very quick around here. So I'm not going to go into details of any of this other than just to say the asset under management or the asset size that we have. Just a few months ago, it was only 670. Now we have 1 billion in front of that number. So we are growing really fast at the moment. And it's very exciting, very busy. I wake up with a dark circle around my eyes every day, but we are very happy overall. So this is how much rewards we have paid out. So as I said earlier, we pay up to 80% of how much we make before we start deducting any expenses. So the reward payout with the interest, as it's saying, it's actually growing really, really fast as well every week. Since we pay out every week, we can keep the sort of the track of like how much we're paying weekly. And as the person who looks after the accounting department as well, every week I see that number, I go like this. This is again another stats. You can also, this is another way of seeing how quickly we're growing. It's not just the payout, but the people who come through KYC. people who are actively transferring the coins into our wallet, how much sales have been. Oh yeah, people can actually choose to earn their interest either in kind. So if you have Bitcoins with us, you can choose to earn the interest with Bitcoins, or you can choose to take the payout with our token called CEL, C-E-L, and get 30%, up to 30% bonus payout on your hard-earned money. We have the concentration of Celsius users go with kind of internet coverage, and it's no coincidence, because in order to have wallets, in order for you to have these digital currencies, you need a reasonable internet coverage, right? So the stronger internet we have, the more users we have. This is what Alex Mashinsky, our CEO, likes to call the business model, or the flywheel of Celsius. So you kind of got the gist of what we do with the business. We take the transfers from a client, we make money on them, we pay out, we develop the relationship with both retail and institutions. This is our tokenomics, and the CEL, our token, takes a very, very big part of this flywheel, because if you choose to earn in CELs, you can earn more. And if you choose to pay your interest using the CELs, you can actually choose to pay less amount of money than if you're paying in kind, which really encourages people to keep what we call HODL ratio. It's the amount of CELs that you have against all other cryptocurrencies that you have. And the more CELs that you have in your wallet, the more CELs become necessary, right? As part of your beings. And actually the CEL token has risen, the value has risen over 2,000% in the last 1 year. I myself hold some CELs, and so I'm very happy with their performance. Has nothing to do with me being the CFO. I'm just happy that I have this investment vehicle as part of my overall wealth. So if you have certain ratio, 5 to 10% of CELs, if you're silver level with the CEL HODL ratio, you earn 5 to 10% more. If you are at the gold, you earn 10 to 20% more, and then you have platinum, then you have you earn more than 20%. So that's really our flywheel. Looking to sell, I think it's something to, if you are into cryptocurrency, it's definitely one of the tokens out there that are relatively hot right now. So because this event was organized by the Tokyo FinTech CEO founder, I wanted to throw in a slide about Line. So this partnership just opened a few weeks ago. And because at least some of you are from Japan, you know what the company is. But for those of you who are not, who have not heard of Line, or who are not quite sure of what our partnership with them is that we actually, because Japan is a very heavily regulated country when it comes to blockchain cryptocurrency business, we can't just drop a person in Japan and start an office there to start taking the coin transfer from the people in Japan. So we formed a partnership with Line, which is one of Asia's largest tech conglomerates, with 84 million users of their messaging platform alone, to utilize their customer base and the legal existence in Japan to start opening up the business. In just 1 week after we officially opened, we already have 6 million worth coins coming from this partnership. So we are very excited about this partnership, and that we want to assure everyone that we are taking every measures we can take to make sure that we are going to stay legal, and we stay the legal entity, so that we can continue pay out the high ratio on your hard-earned money that you trust us with. With that, I'm going to end my presentation. That was about 20 minutes or so of the presentation, and now we can move on to the questions, discussion, whatever that we want to do.
So if you have any questions, please either type them into the Q&A box or raise your hand, and then we can switch you live as well. The first question that came here came from India and was asking how many users do you have in India, but maybe you can answer a bit more broadly in terms of overall regional distribution.
Okay, so yeah, the regional distribution, thank you very much for that question. The regional distribution, really, really good question. Right now, it's like 30 to 40% US or North America, another 30 to 40% overall sort of Europe, mainly Western Europe, and the rest spread out throughout the rest of the world. We do have our office presence in the US, the main office being in New Jersey, since New York is, probably some of you know, it's a little bit more difficult place to operate as a crypto company. So that our headquarters, although I live in New York, our US headquarter office is in New Jersey, Hoboken. And we are a UK company because of a lot of different types of regulations that we have to deal with. So although we are a Delaware company, our headquarter office is in London, UK. And we also have a big presence in Tel Aviv, Israel, because of where our founders come from. So out of these offices, those are only the offices, the physical offices that we have, yet we have our customers, because this is very much digital business. You can be anywhere, you can be on the moon for that matter to operate this business, and you can still serve everyone around the world. So we actually do have the rest, sort of 30, 40% coming from all over the world. The small sort of like further distributing that, I don't have the number in my head right now. So I'm not able to address how many people are coming from India specifically. But I know that it's growing, and then obviously we'll pay a lot of attention to these very tech-oriented, very big companies, very big countries.
And so when you said you're registered in the US in New Jersey, so just across the river basically, but that also means you don't have a crypto license from the New York Department of Financial Services. And does that then mean you essentially can't do transactions with New York State residents?
We can. We just are not able to hold the customer assets outside the wallet, which is not able to operate in New York. So we actually have a separate custody business with the entity that can take the New York coins, New York residence coins, I should say.
Understood.
Yeah.
And so the model that you've implemented with Line, as long as you're dealing with a counterparty that also has a US entity, or maybe you do it outside of the US, but Bitflyer, for example, is an obvious example. They have a US entity and a European entity. You could essentially implement a similar structure with them as well, right?
Absolutely. So we no longer have this partnership in place because the regulations are even more difficult in Germany, nowhere. But we did have a similar relationship with Bitwala. We were kind of like, they were sort of like white labeling our solution, if you will, to do something similar. So yeah, we can actually definitely have this kind of partnership formed all around the world. It's more about, because we're still a small company. I mean, we're growing really fast, but you saw it, we have 65 people. So if we end up having 100 different partnerships, it's very difficult to manage. So we have to be very strategic as to who we work with.
Yeah.
But there are definitely some, exciting institutions that are now approaching us. It used to be just a year ago, right? We were outreaching to them, but now we're hearing the other side, saying you want to work with us. So we're very excited about that.
So one question here, I think the answer is that in the structure that you described with Line, you wouldn't have a Celsius app in a Japanese app store, right? This would be an offering. If Line makes it available to their Japanese user, it would go through the BitMax functionality and the offering that they have, but you're hidden from that perspective as a back-to-back transaction.
That's correct. So indeed, Line is the omnibus account to us. So all the coins come through them, and all the coins go out through them.
So I mean, that's an area where the crypto market then now mirrors very much what we know from the traditional financial markets, where you have your booking entities and execution entities, and right, you kind of put the trade through like back-to-back intercompany transactions and so on. This is like ultimately rebuilding that part at least.
Yeah, absolutely. Yeah. And because this is a in front of the Tokyo FinTech where I will propose something. The Line business is one side of our equation, right? To take the coins in, and then but we do need the other side of the business too to make this holistic, which is we have to be able to find a partner where we can do the lending through. So in order for us to make money, right? So right now we take the coins and we will deploy wherever we can. So it doesn't have to be like, it doesn't have to be deployed to the Japanese market. But if we can also do the other side, right? People can take the loans against their own collateral instead of us always finding every single use case for all these coins coming from Japan. That is like a holy grail for us. So if you can think of someone, I'm all ears.
From that perspective, if you look at it from a product perspective, I mean, 200% over collateralization is maybe not that bad, although we can talk about the risk side as well, but it's also not tremendously efficient. So are you looking at ways to make it more efficient? So it's maybe only whatever, 50% more, 20% more, and you get a bit more into kind of how margins are treated again in the traditional markets. What's the product roadmap further out from here?
So yeah, if you're talking about the collateralization, the 200% collateralization is obviously like with retail and then who are using their own coins to borrow money from us, right? So on the flip side, on the B2B side, I mean, clearly not everybody, not all the big institutions, provide, right? I mean, it's not a reasonable business model on any part. From any angle. So what we do instead is to conduct obviously a very additional due diligence on top of regular KYC that the regular retail clients go through. So of course, now KYC is granted before any institutions can be onboarded. But if they do request a credit line for that matter, we do I have a risk management office also. Like earlier I said I have the accounting and then I have the trading, but I also have risk management department under CFO as well. And they conduct a very thorough due diligence on the company, look at the financials, look at the profile of the traders, look at the profile of the company, do any kind, do the normal risk assessment analysis. And then we grant like, okay, 2 million, 5 million, whatever it might be, we grant the credit line. So there are two slightly separate things going on depending on if you're talking about retail or if you're talking about large institutions.
I mean, now even with that safety margin and all the risk metrics in place, we did have the Black Thursday in March. March was it, right? Where we had a significant drop, and the price is more than halved. And at the time, Maker, of course, got into a bit of trouble, and now we got the class action lawsuit pending there. And I remember that Alex was tweeting at the time that was actually one of the best days in Celsius histories because, right, the system was robust enough, it didn't break down, it didn't have any issues. It was obviously an environment where the interest rates went through the roof. So both Celsius and the participants on the platform had a record earnings day. if I recall his tweet correctly. And so I'm sure there's still, despite how well it went, actually some retrospective on that day and what worked and what didn't work. What did the organization learn from such an extreme price movement?
Yeah. So, I mean, Alex is absolutely right. It was actually one of the best days that we have had. I mean, a lot of you probably have done some kind of trading. So, you know that, I mean, the trading game, although we don't want to make it that way, somebody's gain, somebody's loss is somebody's gain, right? So we actually happen to be on the right side of that market. I mean, we clearly saw what was going on. So we were able to take advantage of that. And then if you remember what I said, we actually pay up to 80% of what we make. So actually the advantage that we find in the market is actually advantage for our clients. And yes, we did have robust enough system so that, there was some panic withdrawal, right? Just like anything. Any trading related institution that you can think of, there was some kind of withdrawal on that day, but everybody was able to, including really large withdrawal, were able to complete the withdrawal within the time frame that has been allotted for any kind of large amount. So the system held, our trading business did very well. We met all our margin, the margin calls that we were called, and all our clients met the margin calls, and only the people who chose to liquidate the position because they didn't want to submit additional margin, they voluntarily liquidated. So there was no forced liquidation like many other exchanges and in other places that just kind of forced the meltdown to happen. So I think, as Celsius, obviously we came, that was a really busy day. That was 1 month after I joined Celsius as a CFO and CIO, and I had a much smaller team back then, and I was going like this every 5 minutes. Oh my gosh, where am I going to find all these coins as the margin calls are coming in? But somehow we managed to meet all of them. My staff did a really excellent job. I have been in finance and I have done some trading, and I would say this was definitely the most volatile days I personally have experienced. Somehow we made it through the day, and somehow, because I knew that my staff were doing the good job, even when other executives, other parts of the company were beginning to be concerned if we can meet all the things that were happening, I was able to say, because I was able to trust my staff, I said, not to worry, we are meeting all the money, we will find them, don't worry, just go conduct the business as usual. Nothing bad will happen to us, and really nothing bad happened to us. Indeed, something really good happened to us. So I think that was our March 12th experience. And I think for a while, the crypto industry, together with also Corona lockdown, happening at the same time, it went very briefly, very quiet. But immediately after that, it just kind of came back with a roar. Our sign up on the weekly basis went a record number. So I think that indeed, a lot of people out there realized, saw the difference, right? Who can really help us? Who cannot help us? Who's just there? Who's dead? Who's the. So I think that really kind of gave us the wind behind the sail.
Excellent. Maybe last risk-related question, but the other risk that everybody is conscious of is, of course, the risk of hacking, cybersecurity issues, etc. And clearly, with like an Israeli background in the company as well, one would assume that you're well positioned there. But how do you view the cybersecurity threat landscape at the moment?
Yeah. Yes, so in the landscape, generally speaking, it's real, and everybody seems to be taking a turn to get hacked, right? Yes, but no bear. As you suspected, we do have a very strong security department. We have a CSO, the Chief Security Officer, who has an experience of working both on the dark web side and then on the sort of the white side, for lack of better words, bringing all that experience into how to conduct Celsius business. and he's really tightened up the operations from the day he joined. So we already had a fairly good security system prior to that. But since then, it's almost like, right? I mean, for us who have to do the day-to-day business thing, it's almost like, oh my God, no more security talk, no more security this, no more security that. But he's obviously like pounding us with it. He's like testing us. He's sending the test emails. A lot of people, sort of like tripped over those things first. But now, because they got trained so well, if some email comes that is legitimate, we're still asking questions. Should we actually open this email? But that's the kind of mentality we need in order to run the business of this nature, right? So I think both financial security and cyber security, I think we have a very good team working at Celsius that keep us safe on any given day so that I can do my job.
Excellent. Yeah, we've got the annual Japan Financial Institutions cybersecurity exercise kicking off today. And so there was a discussion on how much sense does it make at an industry level with 110 participants, 2,000 people or so. And for the most part, it's the same as SIFMA in the US. It's also training the communication between entities. It's not so much like testing your defenses, which, as you described, you need to do at the micro level within your organization, really. Right?
I mean, I'm a business person, so I don't implement the security myself. But one thing that I always talk about, because as the sort of entrepreneur myself, and then also like working for a small company and now working for a blockchain-based company, and security is a real thing. One of the things that I think I pose to everyone that I talk to is, the moment we began to specifically talk about cybersecurity, it became the business of somebody who's sitting in a dark room, surrounded by the big black boxes, like something flashing, sort of a matrix world, right? But really, I mean, from the day two people were in the same room thousands of years ago, we always took care of our belongings very well. I mean, whether it's your baby or it's your food or it's your, I don't know, clothing. I mean, you locked up your place, like you kind of like slept on it if you really didn't want to have somebody to take it away. So when it was just a security, we all took apart protecting our own belongings. So why all of a sudden it became the digital assets and it just becomes somebody else's job? It's not. We really have to really kind of pay attention to the security of your digital assets. And what I always say is 90% of whoops actually come from the insiders, like your colleagues, maybe yourself, your colleagues, your friends. Maybe you forgot to lock your computer, or maybe like you accidentally opened the email that you shouldn't have. Or maybe somebody gave you the jump drive and you didn't check what file you were opening, and then you opened something with infection, right? So those are more than 90% of the reasons why your company gets into trouble. Hackers take a really tiny portion of what really happens. So one thing that I would say to everyone, every time I have a chance to talk about cybersecurity, is this. It's really you. It starts with you. It's not the cybersecurity officer. It's not the guys sitting somewhere. It's not the guys who are building a laptop. It's me, it's you. So that's something that I want to leave here too.
Right. And you need to practice it. And so coming back to the competitive situation a bit, so a question here on Wi-Fi, you're on finance. Is that competition for you? Is it a threat, or is it not so much competition because more of your business is institutional?
Say the first part of the question again. I'm sorry.
Would Wi-Fi, you're in finance, be a threat to you, a competitor, or do you see them more as, well, helping grow the industry overall? And given that your focus is more institutional, it's a different market segment.
Oh, I see what you're saying. So, okay. I mean, effectively, everybody's a competitor, right? When you're running the business, I mean, you really kind of want to be the number one in every area, regardless. But this is another thing that I always say about the blockchain industry, the companies, or like sort of this kind of new modern era financial institutions. This is still a really, really, really tiny part of the financial industry overall. I mean, generally speaking. And when we talk about competitors, I say, yeah, I mean, everybody's a competitor because you're running a business and you want to make sure that you stay ahead of the game. But guess what? I mean, our real competitor is not my immediate competitor that everybody kind of thinks of. Our real competitor is the traditional banking system. Let's aim to kind of like, let's hold hands together and then let's beat the banks like, JP Morgan, the Chase Bank, or Citibank, or Bank of America. Those are the real competitors of us. And to sort of to start kind of like killing each other just because we are sort of like thought as the immediate competitor. It really takes energy, and we are not focusing on the right competitor. I mean, if you think about just in the US, just less than 10 years ago, the merger between T-Mobile and an AT&T were blocked by the Fair Trade Commissioner because it was going to create too much of a market share coming into one company, right? But just the other day, Sprint and T-Mobile, just a year ago, Sprint and T-Mobile merger went through just like that, because no longer the telephone companies are competing with each other, but they are actually competing against a tech giant like Google. How do you really compete with that if you actually work together, right? And then I think that's where we are today still. In order to really take the real competitor, who should really become our competitor, is by us kind of playing nice together for now, and make sure that the individual, like a lot of individuals who still don't understand how cryptocurrency works or blockchain works, understand and come to this side of the financial services. Then we can really start competing with each other, in my opinion.
Thank you. And that question came from Jörg, and Jörg looked at how you treat all these lending protocols in Japan, also from a regulatory and taxation perspective. So in the US, with like the cell that you hold, do you declare the lending revenues as interest income, or what do you do in your tax declaration?
So yeah, I mean, yes, lending, what we charge is interest on it. So that's what we do, absolutely. And then that's really our bread and butter business. And then up until now, there was a very, very tiny sort of trading income, like the real trading income, right? Because we are not yet a regulated entity. So in terms of trading, and when you think about our balance sheet, the main part of our balance sheet is still the customer assets. So we should not be taking a lot of risks with the customer assets as non-regulated entity, especially. So up until now, we have been mostly doing collateralized loan business, which is still a very, very profitable business if you do it right. So we didn't really have to venture out and take a risk. But now we are seeking for license in the UK. We are in the middle of registering in Australia. And as we become more like a bank, and then also we raise our own equity money, obviously the business model is going to start changing a little bit. But fundamentally, we still will be like first and foremost customer business, and our bread and butter will continue being crypto lending. So interest income it is.
So why Australia versus, for example, Singapore was the question. Singapore has put out regulation or forces regulation registrations now. Is Singapore as the gateway to all things Asia FinTech? What's your view on that market versus Australia?
So it's about, still being only 65 people company, how and where we spend our resources really becomes the question, right? And penetrating into the APAC market is obviously something that we wanted to do and we have to do. And when we thought about where do we start, I mean, obviously we looked at Hong Kong, obviously we looked at Singapore, obviously we looked at these obvious places to start. And I'm sure we still will be there, but as the first place, because we actually already have a good amount of loans coming from Australia. And also we don't have, in the competitive landscape, when you look at the competitive landscape, Australia poses a little less competition than say like start right in Singapore or something like that. So, that's really the reason within APAC, that's where we're starting. But once we have a kind of like a home in Australia, it's not as difficult for us to expand from there within APAC. We are already, in terms of like customer facing, kind of biz dev kind of people, we are already looking for people to work out of Hong Kong, Singapore kind of locations. So having a license is a separate issue from where we might be operating out of in the near future. So those are two different things, and that's really why UK is obvious, right? That's our headquarter office and all that. Australia, the reason really is that.
I mean, do you think in the regulatory environment that will stay, that where you have the license and where you're operating and where your customers sit could be 3 different jurisdictions, or ultimately that will converge?
I think, I'm not sure if this is going to address your question, but because we already have a good distribution of customers where they come from, 30-40% North America, 30-40% Europe, and then the rest from the rest of the world, I think it's probably going to remain distributed like that. License is only going to allow us really to have a more presence, more physical presence, and also allow us to do more with our assets. I think that's probably the bigger difference of the two.
Okay. And we started off, or you started off also with saying like the real competition is the banks, and the issue that we have in terms of user adoption at the end of the day is also some of like usability and what happens when things go wrong, right? Like on a Black Thursday. And whom do you call? And if you talk really about decentralized finance, there's nobody to call, right? I forget my private key, I forget my PIN number on a debit card. I can go to my bank branch and fix it. If I forgot my private key, I can't, obviously, classic example. But that at the moment, I would argue, limits a bit the demography that you can acquire as a client. So what path do you envision, or does Alex envision you or Celsius as a company for making this universally available and maybe hide some of these complexity, especially for the older users?
Yeah, so I mean, having the physical ATM sort of like a presence is still like, I think, far distant. But in terms of usability or customer service, I think that's where, and then again, and I'm not here to necessarily like advertise Celsius network business model or anything like that, but having this CFI, the centralized finance, that are stitching the decentralized finance the way a company like Celsius does, I think, really kind of helps for some people, especially as you said, and older people who are not necessarily used to doing everything in the virtual space, a little bit, right? Because if you are so used to having the credit card and go to the physical bank, and then that's only the way you can interact with money, then we still have a little bit of a distance to go. But if you can overcome the fact that you can do everything on this little phone, if you can get to that place, then having the centralized finance like Celsius is going to have one place where you can go when you lose a key, or, oh gosh, I forgot my password, what am I going to do? There is somebody who can help. We literally have a customer support desk where you can send the email and ask a question, right? Or get the help when you lose something. And yes, because we are centralizing certain things, if you yourself deploy your money to DeFi and get this ridiculous like 80% or 200% APY kind of return, great. But I mean, are you sure you know what protocol you're dealing with? Are you sure you're not dealing with some fake money? We centralize finance. If we ever choose to deploy to any of these protocols, we actually vet all these things with the resources that we have, and also we have some insurance we are looking into additional insurance for to be protected. So while you still can enjoy upside, maybe it's not 200% return on your, on your position, but while you are enjoying back a part of that kind of like a high return, you are dealing with real people. And there are people who can help you in case something happens. So I think having the CFI in the middle of DeFi is a very nice, I don't like the word compromise because of the way it sounds, but I think a very nice compromise solution of how to deal with DeFi, financial services, as we start going down this path.
That makes sense. Thank you. I mean, I think the challenge to some extent is that we're breaking this down into so many different protocols, right? And many of these are honestly experiments. They're like very early stage and they haven't been fully tested out. And we don't necessarily fully understand how they interact across. And like these flash loan exploits that happened last year, I found fascinating because clearly somebody understood it in so much detail, enough detail to create that exploit across protocols, stitch them together in a way that you end up at the end of this circle with $400,000, $500,000 in the pocket. And that needs some serious brain power to figure it out, I think. But at the same time, decentralization always has that risk that, right, these unintended consequences that somebody is then ultimately exploiting. So I can follow the argument of you saying we're a bit more centralized, we have it under control, but it's also safer, and that obviously comes at a bit of a premium, so maybe the returns are a little bit lower. But still, in a zero rate interest rate policy, the interest rates look still pretty good. Here's a question: is Celsius utilizing DeFi protocols itself?
Utilizing as in, no, we are getting some yield out of some of the DeFi, but we only deal with the audited protocols, and we have traders on top of the position if we're to the protocols that we are deploying our coins. So yes, we are utilizing them, but no, we are not getting crazy with that. I mean, like I said, our bread and butter is still crypto lending business, which is collateralized in most cases. And if it's not fully collateralized, it comes only after the full credit review has been conducted by another fellow CFA charter holder, and who has like 5 different kind of series registration and all that kind of stuff. So that's what we have as our business model.
Okay. Let me see if there's more question coming. I wanted to ask you about Alex as a person, because he's got a very interesting profile, and I think some people react very positively to it, and somebody he might rub a bit the wrong way, which is fine. I think no issue with that. But he posted a few weeks ago. He posted Harvard Business School case study, which I think was on his earlier companies, maybe even his first, which was like a telecoms venture in the 90s. And the study was written in, the case study, Harvard Business School case was written in 2001, I think. So it's a little older, but I haven't worked for anybody who's actually had written a Harvard Business School case on them. So that's interesting. But what can you tell us about him as a person, as a character? Obviously very driven with 8 companies or so. Does it feel like day to day working with such a person?
Obviously, I don't get intimidated too easily, but the very first time I sat down with him, I'm like, what did I get myself into, right? I mean, how did I get here? An investment banker, very traditional investment banker girl who started in Tokyo. How did I get here? That's how I felt at the beginning. But yes, I mean, just like any strong leader, there are times when he states very strong opinion, and then that does, like, sort of create that bipolar kind of almost persona that Norbert, that you described at the beginning of this question. But overall, he's actually, you know, when you actually sit down and talk to him, he's very reasonable. I think that's a key. You can be a little bit eccentric. Sometimes like you have to be a really kind of like strong standout personality in order to drive tens, sometimes like thousands of people, right, to success and have multiple IPOs in your past. You really have to have that kind of personality. But when you sit down and talk to him, and then when you really listen to him, you actually hear that things that he says most of the time make sense. And that's, I think, important, because business, no matter what kind of business you run, you need to have some common sense. And you need to have some business logic in order to be successful. If like, you know, sort of like somebody like Edison, right, from the past comes and try to like, you know, is reborn into the present world and tries to run a company, he's probably not going to be too successful because he's a little bit too out there. So you really need a person who can actually try to take the whole sort of company a little bit out there so that you are bringing some innovation to this world. But at the same time, you know, you have to be able to fit that into the real world. And for that, you need a real person. I would say Alex definitely brings in that kind of quality to company.
Yeah, that's valuable. It's going out to the edge, looking over, getting scared at times and backing off, but at least pushing the envelope and trying to move forward. Fantastic. Meta question, is there anything I missed that I should have asked, but didn't? No? Okay. Wonderful. Thank you very much again for getting up this early. It was fantastic to see you again with the third time, with a third different topic. Super interesting, super versatile. And wish you a good rest of the year, and then hopefully we get to see each other in person again in 2021.
Absolutely. We've got to really make this an annual, like minimum annual thing. So I'm looking forward to next October, November, but even before then, let's do catch up periodically. And thank you everyone for being here today. It was very enjoyable to get to do this, albeit virtual, not in person, but keeping the schedule with the Tokyo FinTech.
Okay. 10 billion in loan balance in a year from now.
Yes.
All right. Thanks everybody for joining. Global representation, I think, in the audience. Appreciate all getting up early or dropping whatever you were doing. And I don't think we have anything in the calendar next, but please follow us and watch out for our next events. So thank you very much. Have a great week.
Thank you. Talk later.
Bye-bye.